Good evening, ladies and gentlemen. I think we are good. We are live. I can see the microphone is working. You see my screen. You see my face. And just like clockwork, as we come on, the market starts to curl over ever so slightly, which is interesting because it's been sitting in. I'm talking about the US equities here. Looking at the other screen, sitting there in a bit of range now. Looks like Nasdaq's trying to attack the intraday lows. Still an inside day after yesterday's drive. Crude oil popping a bit. It's in a bit of wait and see mode, isn't it? We have Fed FOMC on tomorrow, actually, and then we have market break on Thursday, and then of course some options expiring and stuff on Friday, but we've still got some time to go till the end of the quarter, which is often super busy. Not many persistent moves apart from well, even crude reversed hard. Stuff is in a bit of holding patterns, right? I was chatting to PT yesterday, good friend of mine, trader on higher time frames, saying, listen, it's just tough to get on these bigger moves. It's A to B type plays at the moment. Nothing's running for multiple days in a row. That will change at some point. Absolutely it will. But it's knowing the regime and environment you're in and adjusting and adapting to suit. Some people's perfect this is, pinging up and down above VWAP. They love it. Others don't like it. They prefer a bit of persistency of trend on the daily. Now, are we at highs? Are we holding at highs so far in the US equity markets? Yes, we are. Is that a bearish sign? No, it's not. Could it shift in a tweet, in a headline? Of course it could. So part of being a good trader is being patient. You know this, I know this, but it's just put into practice sometimes. Sitting on your hands saying, hey, I'm not interested until one of these levels breaks, whatever market you trade. I want to see the level break, and then I will at least look and be interested. Until then, it's doing homework. It's doing stuff like this. It's reading your books. It's going through your journal. It's looking at your data. It's doing all that kind of good stuff, because that moves the needle forward without actually clicking buttons, so to speak. Okay, so let's get started, ladies and gents. Today, we're going to talk about the Trader's Reset System. Now, this isn't something that is super exciting and headlines. Oh, this is super sexy. We're going to come and we're going to learn this. But you know what? If you're here watching this, or if you're watching this on recording, you're the type of trader who says, you know what? I think I need something to help me avoid these prolonged levels of drawdown. We'll talk about in a moment. We're going to kind of cover what we're going to talk about in a moment. We'll talk about what we're going to talk about in a bit. I don't want to jump the gun. I'm guilty of kind of getting ahead of myself too much because I want to share with you valuable type of stuff. But this is really kind of getting a real practical approach to kind of recovering from a drawdown, and if you're in a performance rut, any of that type of thing. We're going to separate them, segment them, and work out the severity of them and go from there. Richard Dennis, great quote here, which Linda Raschke also said, the key to making money is to stay in the game long enough. Richard Dennis, of course, was the, I say owner's not quite right, the inventor of the turtle traders. You've heard of the turtle traders, group of traders who he believed he could train to become profitable. He did. They had like a 30-day breakout system, if I'm not mistaken. Back then, when the markets were a little different environment, they would trend, they would break. He would kind of training them to trade this breakout. And famously, he would say, we were sitting around playing pool. We were sitting around playing board games for a lot of the time because we just didn't have the trade set up. When it came, we executed and we kind of did what we're supposed to do. Now, the markets have changed a lot now. People talk about turtle soup, all this type of stuff too, which is like, a bit of a dig at the turtles. But anyway, point is Richard Dennis, interesting character, and well worth reading up on that if you're into your trading stuff. So today we talk about the Trader's Reset System. All right. Does help if I have this ready to go. There we are. Okay. So drawdowns, stagnations, ruts, whatever you want to call them, they're normal. I'm not here to say to mislead you and say you are never gonna experience a drawdown. You are always going to experience an equity curve that goes bottom left to top right, because no matter who you are, no matter how good you are, no matter how many resources you have, how skilled you are at trading, no one has 100% success rate. Oh, apart from maybe people trading some sort of HFT edge, which is completely different, right? They're trading an information edge. That's not trading in my eyes. Yes, it technically is, but that's something completely different, right? And these guys were making 99 point something percent hit rate because they were seeing information before others. Completely different thing. I'm just being pedantic here, but I want to be clear. But generally speaking, and almost without exception, you will experience drawdown no matter how good you are, how consistent you are, what you trade. And so just being comfortable with that fact is the first port of call. Saying this is normal, is not abnormal. Everybody experiences this, including me, including you. And so no matter what anybody says on social media or you hear from anybody else, there is no such thing as a perfect system that is never going to draw down at some point. Now, the severity of the drawdown is what we're going to dig into in a moment. The cause of the drawdown, we're going to dig into in a moment. Recovery, that type of stuff, we'll explore that. But I wanted to just get out there and say, hey, if you're in drawdown, if you're in stagnation, whatever situation may be for your equity curve at the moment, it is normal. That is the way it's going to be. And so getting used to it and training yourself to deal with it is the answer. It's not to find a system that can magically eliminate drawdown, stagnations, ruts, whatever you want to call them, because it doesn't exist. And so the focus should be, this will happen constantly through my trading career. I need to manage it effectively. And that's the skill that I'm going to push on, rather than where a lot of traders go, which is how can I avoid the drawdown by finding a system that doesn't ever lose, which is completely impossible. So unavoidable versus avoidable drawdown. These are two distinctions as well. Kind of get these slides early on to really cement the two buckets. Unavoidable, avoidable. So is your drawdown a natural part of trading? Just like I said before, you can have the most effective strategy in the world, but you can't dictate when the series of wins and losses are going to come out of the market, right? Even if you've got some miraculous 90% win rate, you're still going to have 10% losers, and that could come in any sort of string, because that's the law of the law of randomness, if you like. I'm sure there's a better correct scientific term for it, but you get the point. So avoidable drawdown, just a system, just a strategy, shifting market conditions, whatever it might be, that's normal, right? Or the avoidable drawdown, which is where you are the cause. Okay, now different causes require different protocols, and to each of them your response to the drawdown is key. We're going to dig into this more, but I want you to think that in your mind. And today specifically we're going to talk about the avoidable drawdown, because I believe that for most traders that's where the biggest damage is done. Unavoidable stuff, fine. Now, not to get too far ahead of ourselves, sometimes unavoidable drawdown, the natural ebb and flow of profits and loss, can turn into avoidable drawdown when your mind's taking control, all this type of stuff. And so that's the bit we're trying to eliminate now. I'm going to touch very briefly on the unavoidable stuff because it's worth just kind of sealing the box up and saying, okay, we've covered everything. But that's a different tactic, different strategy, different approach. The avoidable drawdown is the errors that you're making, all this type of stuff that do the damage to the account, that if we can deal with, for many people that's the game changer that flips the script. Okay, so before we get going, I want to remind you, of course, we do this every week because it's just the right thing to do. If you are new to trading, please be super aware. If you're trading with leverage, you're trading margin, things can get nasty very, very quickly. You can lose a lot of money very, very quickly if you're trading too much leverage, too much margin. It's great when things are working well, and that's why we try to use it to our advantage. We use it as a tool to maximize the winners and to hopefully minimize the losers. We can't guarantee this. We have things like stop losses, reducing position sizes, all this stuff to try to use it in the way it's intended, and try and get the most out of using leverage and margin. However, just please be aware that losses can happen fast. They do happen fast. You've seen stuff moving, spiking. If you're in too big a position, deer in headlights syndrome, gaps over the weekend, there's all sorts of stuff that can come into play. So, trading is super risky. It's not for everybody. So just be aware of the business you're in, what trading's all about. And if you're brand new to trading, I know we don't have many new traders on here, but if you are brand new to trading, please just kind of understand margin, leverage, work on a demo before you even risk a penny. Right, before you even decide to risk a penny. At that point, you go, no, it's not for me, that's fine. But at that point, you go, I understand, I know what I'm doing. I'm going to go in my eyes open. That's good too. Okay, so A quick introduction. My name is Mark Holstead. I know many of you have been here before. A pleasure to have you back. Thank you so much for coming and listening to me once again. My hope to give you as much value as I possibly can, but ultimately I'm realistic. If you go away with one or two nuggets that help improve your trading by a few percent, a few base points, help you eliminate something from your trading that's been bugging you, help you improve something that is going to move the needle, I know there's a fine line there. And so that's my job, is to give you as much information as I possibly can, not noise, that's going to help you improve your trading. I started trading in 2001. I traded through all sorts of different type of environments. And I'm not here to tell you how to trade. I'm not here to say, hey, listen to me, I know everything, because I absolutely don't. But I'm a unique perspective. I see developing traders coming through. I see traders who've done very, very well. I see traders who have struggled. I see some of the greats. I have contact with some real super traders out there, and some traders who struggle. So I get to see different personalities and different styles. And when I put this stuff together, not only do I leverage on my own experience in the markets and my own journey, but also from others as well, who may have approached it from different angles, different personalities, different journeys, etc. So that's where I'm coming from today. Okay, let's think about or discuss avoidable drawdown. So very briefly, avoidable drawdown is where we wait a second. Error, hands up. This has not happened yet. It has not happened yet. The titles of the slides are the wrong way around. I will hold my hands up. I double check this. I run through this. Imagine this says unavoidable drawdown. Okay, this is unavoidable drawdown. I know this is a schoolboy error, and I'm going to hold my hands up here. Admit it. Sometimes these things happen. Very, very rarely, I might add. But this is we have an incorrect title. Okay, unavoidable drawdown. That's why I said it very quickly. I looked at it twice. I thought, hang on a second, that's not the slide we did. Anyway, so unavoidable drawdown is when you have just a series of losers, right? We talked about it so very, very briefly. You want to carry on, you want to stick to the system. It's the sort of thing that comes just with the flow of your system, your strategy. You're trading opening range breakout, for example, you're going to have a string of losers. You're trading a volatility breakout system, you're going to have a string of losers. You're trading a mean reversion to VWAP system, whatever it might be, you are going to have a string of losers. So generally the approach with that is to say, you know what, carry on, stick to the system, make some small adjustments. This isn't going to be the focus of the webinar today, but I want to touch on it. You do a tactical review, you would look at the conditions, the time of year, price positions, market choice, all those type of things. And there's probably a lot more digging we can do to explore that, but you can't control the sequence of winners or losers. You can't control how they come out of your system. That is something that you're sticking to the plan, you're sticking to the process, you're trying to make adjustments. You can't control the outcome of each individual trade, which is why it's unavoidable. Now, what we want to focus on today is avoidable drawdown. Okay, again, ignore the unbit on this. You get it. Avoidable drawdown. I'm sure you forgive me, guys. Avoidable drawdown is something you can control, which is generally triggered by emotion. It's triggered by either a state of just poor trading. You're frustrated, you're over trading, you start taking substandard trades, you start doing revenge trading. This stuff is avoidable. And I believe why I'm focusing on this today exclusively, or majority of the webinar today, is because I think for many developing traders, this is the biggest cause of many losses. It's the biggest thing, and it's as I say, it's not like it's new super sexy system or a strategy and this and that and the other, but often just dealing with the reality of your performance and looking at the equity curve and saying, hey, yeah, I had some avoidable drawdown. I had some avoidable drawdown here, which is not really what I should be doing. I can avoid it. I don't have to dig that massive hole for myself. And an example would be if you're a day trader, you're down £300 for the day, say, natural part of the system. You took a trade, took a couple of stop losses, and then you kept digging. You got annoyed, you got triggered, you carried on, then you end up losing a couple of £1,000. That part is the avoidable, which is usually way more bigger in size and a much bigger magnitude than the other part of it, which is just a normal series of winners and losers. Okay, so why this matters and why we're focusing on this. And if you've been trading for any period of time, you will know why this is important. If you've ever been in a situation where your trading has started to spiral, it often starts very small. It's a little bit of frustration here. you run into the office, you kind of took a trade you shouldn't have. Maybe you kind of jumped onto a momentum move because you saw it spiking and thought, I'll just jump on that. And then all of a sudden you have a loser, you feel even worse, you increase your size, all the stuff that we talk about. But the important thing to remember here is if we can catch those spirals early, they're relatively easy to correct. But for most traders, it's too late when we realize where we are. We've done some damage to the account and we've had that avoidable drawdown that we just didn't need. Now, there are times when that can persist day after day after day, which is when accounts get blown into smithereens, right? We don't even want to get anywhere near that, but we want to try and avoid the stuff that triggers it in the first place. We don't want it to snowball. And one of the key skills of a successful trader, I believe, is the ability to be aware of the triggers, be aware of swing into the avoidable drawdown mode and saying, hang on a second, it's me causing this. It's not the market, it's not the system, it's not the setup, the methodology, it's me, my brain, my emotion, my impact on what I'm doing. Okay. And a reminder, stagnation, drawdown, absolutely normal. It's not you. It's nothing to do with anything other than the natural course, regardless of how effective your strategy is. So we have to get used to it. The job is just to not let it get worse. Okay, that's something to have in our mind. Okay, so today we're going to look at these mental resets, and we're not just going to say take a walk, go away, do something. We want a kind of a system that we can look at and say, okay, where are we now? What's caused this? How do I feel? And what do I need to deploy to help me reset? So we're going to break these resets down by the trigger type, so what caused it, the emotional time frame, that makes sense in a moment, and the severity. Because if we again go upstream a moment and say the avoidable drawdown starts somehow doing damage to the account, hurting the account, doing the stuff that and sometimes it's mixed, right? Sometimes you have the unavoidable, i.e. the system's not working, but you're adding a little bit of fuel to the fire. You're adding in the odd trade that really isn't working out. You're sprinkling in stuff because you're getting frustrated. We're going to cover that. We're going to talk about that and specific kind of ways and tactics to reset. So the first thing to think about is to be honest with yourself, okay? And really start to think what causes you to trade differently, what causes you to deviate from the plan, what causes you to trade more size, to chase markets, to not really think about, not plan out the trade, whatever it might be for you. There is going to be something. There is something that causes you to trade differently. For some people, it's a string of losses. For some people, it's, let's say you're a swing trader now looking for multi-day moves. You just don't have the opportunity. You see the market go your favor, comes back, stops you out. You're trying to get on something, comes back, stops you out. Does that cause you then to trade differently, to get frustrated? Maybe you're someone who hates missing trades. Or maybe the kind of unsaid thing is comparing yourself to others and saying, well, that person's doing exceptionally well. Why am I not? They've only been trading for a few years. I've been trading for 3. And, that's a very dangerous game as well. And so you can then start to push the throttle down, try and force things. That causes that avoidable drawdown that we just want to avoid. Because honestly, if you think about that chunk, it's just P&L. We don't think of it like that. It's like if you've lost, let's pick a number, £10,000 with avoidable drawdown, that's £10,000 out of your pocket. That's £10,000 that goes on the top line, not as a draw. So it's just as effective, as not more effective, than trying to find the next trade, hold your winning trades, all the stuff that is going to help the profitable side of the business. But this is kind of reducing the impact of the damage, right? And so we have to acknowledge what's going on. We have to understand, what's causing the drawdown. So examples, sort of specific examples, if you like, is maybe 3 losers in a row does it for you. Now, I know that there are people who go, oh my God, if you can't handle 3 losers in a row, you shouldn't even be trading. You've just got to be personal to you. It doesn't matter what it is. It's just being very, very self-aware and saying, hey, if I'm a day trader, I take 3 losers in a row, I tend to overtrade. I tend to overcompensate on the 4th clip or the 4th trade because I feel the pressure of having 3 losers. Maybe you're listening to this going, that's ridiculous. That's fine. Or maybe you listen to this and go, yeah, that's me. That's fine too. It's just being very self-aware of who you are as a trader. We're discretionary traders, right? We're not mechanical traders. Oh, there's some mechanical elements in there, but we're not algorithms. We're not robots. And so we do have these, mental attachments to certain things, and other people it's more amplified than others. So maybe it is 3 losers in a row. And it's just being honest with yourself. It's not saying you should or shouldn't feel this. It's a fact. You feel it when this happens. Break even trades that should have been green. So if you've pulled your stop to break even too quickly, goes your way, comes back, pings you out. Is that the sort of thing that then triggers you and frustrates you? Early loss. A lot of traders straight off the bat, they're trading the open, pings away from them, take a hit, and they're like, then they see the day differently, the day's framed differently. And a way to kind of diagnose this is to imagine yourself, and you probably know in your heart, don't you? You probably know, but if you don't, you imagine yourself in a position, hey, take an early trade, you're up let's use some numbers, round numbers, you're up £500. How do you feel about the next trade? You feel like confident, you feel good, you're down £500 on the first trade. How do you then feel? It shouldn't affect how you feel the next trade. But if it does, then there's a challenge there. Same if you have a string of losers, whatever it might be. You've got a stop out, got a nasty fill, all these things. It's just understanding your personal warning signs and saying, hey, that can trigger me into this avoidable drawdown, which is what I'm trying to eliminate. So it's choppy conditions. Market's chopping about, get frustrated, get caught in chop. We've all been there, trying to force a break. Multiple goes at it, doesn't work. You stop, whatever it might be. Okay, feeling rushed. Some traders coming in aren't prepared, and that gets to them, that creates an anxiety. That's one for me. I'm super, super cautious. If I feel any level of being rushed, feeling like something, I need to do something now, I've rushed in maybe a little bit later than I should. I'm like, no, that is not going to creep into my trading. This morning prep happens, whether that takes me right past the open and I miss something absolutely fantastic, or whatever it might be. And because I know that if I feel rushed and I'm thinking about something that's dangerous. That's my personal thing. Maybe it doesn't matter for you, but it's just understanding, what's that trigger that is the catalyst then for the avoidable drawdown that we're trying to not get into, recover from, catch quickly, reset from. You can see why we're doing all this. And it does sound complicated, I get it, but this is to save that chunk of money from disappearing from your account in an unnecessary manner. We don't need that. And that's the easiest low-hanging fruit for many developing traders to say, that's avoidable. And how do I avoid it? This. Okay, so 3 levels of reset. I like to look at things like this. And just like I said before, a lot of generic advice out there is walk away, take a walk. That's good advice. That's good advice. However, I think we can be more nuanced than that. And if every time you feel a little bit cheesed off, is better good word. Every time you feel a little bit frustrated, you just suddenly walk off, you call it a day, you ain't going to get very far. You've got to be, you understand there's levels to this. And so I categorize it in 3 ways. One is the light reset. And that's, hey, something's not quite right here. I need to do something about this. 2 is the moderate reset. Like, hang on a second, I'm feeling a little bit annoyed at that. That's frustrated me a little bit. That's not a light, but it's not like, full clip here. And the hard reset, which is the 3rd, which is, you know what, I need to do something serious here. I feel like I could do damage. I want to revenge trade so badly. I want to trade 10 times the size. I know this is the danger zone, right? And I think that being very self-aware of where you potentially sit on this trigger ecosystem of, okay, I could get annoyed if something else happens that annoys me, and being honest about it and saying these things annoy you. You aren't a robot. You get annoyed, just like, if you're there with your husband or your wife, leaving something out annoys them, it doesn't annoy you. Where they open it's just life, right? The way someone drives, the way someone speaks to you. This is human beings. Same in the markets, right? Some things annoy you, some things don't. So light reset, moderate reset, hard reset. Have those in your mind. Before we dig into the actual mechanisms of each of those and the tools and the way to approach that, I wanted to mention this. Emotion has time frames too. And what I mean by this is, just like price action, emotion has, various ways it can be triggered. So you can be trading on the lower time frame, whatever, or the actual trade time frame you trade on, not necessarily lower time frame, but 15-minute, 1 minute, whatever, the actual trade level. The frustration can come from an individual trade. It can come from a market event, and the fix for that is slightly different. to the higher time frame emotion. What I mean by higher time frame emotion is that you have that buildup of pressure from poor performance or drawdown over a sustained period of time as a difference. Now the emotion starts to build, frustration at performance, and it's like a pressure cooker. One, if it's lower time frame, we can deal with it quickly. We'll kind of run through some of the 3 different tactics there. If it's something that's been pressurizing you over time, over the week, over the month, over the quarter, maybe even longer, you've got to be very careful there, because that's when the big blow off can happen. That's when you just do a Hail Mary trade, all the stuff that can do a lot of damage. So recognize where the emotions come from. Has the emotion and frustration come from something that's just happened in the market? You had a bit of a bad fill, a bit of slippage, a bit of a stop out, whatever it might be. Or is it, hey, I'm really frustrated on my performance at the moment. I'm in a drawdown, or I'm just stagnating and I'm up, down, left, right. Nothing's really going anywhere. I've missed some big trades, and that starts to build. Again, your job as a trader, discretionary trader who's taking this game seriously, is to be very self-aware and understand where that level of emotion is coming from. Okay, so we pivoted slightly, but it's worth mentioning. So the reset framework. Here's how you reset yourself and try to avoid this avoidable drawdown. Understand the trigger. Self-aware, knowing what the trigger is that makes you start to trade differently. Number 2, identify the time frame. Are you on the lower time frame? Is it a trade based? Is it the market conditions now, or is it persistent frustration and disappointment with the performance? Different kind of solutions required. Assess the severity. Like, I know I can't do this for you, but you know the difference between, hey, I just got stopped on that. That's going to annoy me if I get stopped again, versus, do you know what? That's really annoyed me now. I just missed that opening drive, and that's probably the trade of the day. Versus, man, I'm long, I'm stopped out. I'm sure I'm stopped out. Oh, it's really annoying me. The severity of that low, medium, high. Again, you know this. You can judge this. You just have to assess the severity. And then 4, we now choose the matching reset tactic that fits with it. So imagine you've gone through this and you said, you know what? I'm a little bit annoyed, man. I should have got filled on that, or I just got stopped at that opening print. It's not the end of the world. I'll move on. Now, this can snowball, right? And this is part of trading, and this is your job to manage this type of stuff. But this can snowball. We understand this. This is why we're kind of attacking it before it gets worse. This is where you just do simple stuff, right? You just breathe. You recenter yourself. You push the chair back a bit. You just whip up to the higher time frame. You just go, you know what? Okay, what's my plan? Okay, I'm waiting for that, waiting for this. Okay, you just reaffirm what's going on, but you have to catch it. If you keep digging and keep going, well, I'll find something, and you don't acknowledge it, it doesn't take long. It's a 5-minute job, this, but it just helps you reset. Your emotional thermometer's just pinged off a little bit. We're not in the red here. We're just a little bit alert. I'm a little bit frustrated by that. All right, let's just bring it back to center. Yeah, because we don't want to have that needle going more and more and more to a point where it becomes more of a disastrous impact on your P&L and more of a disastrous impact and a harder to recover. Okay. Example in real world, road rage, right? Someone just cuts in front of you. You can respond in different ways. If that's the 4th person who's cut in front of you, you could be like, oh my God, this guy's an idiot. You're at the traffic lights, you can shout at him, right? Versus, hang on a second. That's annoyed me. He's driving like an absolute idiot. Let's just get on with my day. He can get on with his day. Let's just go about our business. But it's acknowledging it, bring yourself back to center. So breath, recentering, step away for 5 minutes if you need to. Again, review your plan, higher time frame stuff. What am I doing? What am I trying to do? Looking at your trading plan for the day. Yep. That's it. And potentially, I'm very cautious about this, but potentially say, you know what, maybe I'll just trim down the size a little bit on the next clip. I'm in control of the bit. I'm in control here. It's fine. It's not the end of the world. There's no big problem. Now, if we moved over to, let's say, a moderate reset, so this is maybe where, again, you categorize it for yourself. Very easy to do, very simple, doesn't take much time. But if you have it in your mind, in your subconscious, in the trading day, you go, you know what, I'm moderately peed off, right? I'm moderately annoyed at this. And this is where you take a little bit more, aggressive action, if you like. The light reset is just sitting back, higher time frame, going through your plan, understanding, hey, I need to just be aware that I'm not feeling as good as I could be about this. Moderate is, you know what, I need to just get away for a second. It's not disastrous, but I just need to maybe take 30 minutes out because this could spiral. I don't want to be into the high area here. I don't want to be doing damage to my account. I don't want to be getting frustrated. I'm in near the danger zone. And that's when you take a walk, you do some exercises, you have a couple of dumbbells near your trading desk, whatever it might be, do some push-ups, go for whatever it might be, right? It's just getting away for a little bit. It's not doing a kind of full close the system down. It's just getting away. Maybe you kind of do some journaling. Maybe if you use ChatGPT, if you're journaling, that type of stuff. Maybe really just getting away and just reset, allowing the emotion to dissipate is really the correct kind of course of action here before you do the damage. And then you're just kind of, okay, fine. I don't feel good about this. It's not the end of the world, but let me just bring myself back to center. Now, if you are in full mode, and I'm going to be honest with you, if you get to the point where you're super, super angry and frustrated, you've probably left it too long, which is why it's so important to catch and be very self-aware. Like one thing that all great traders have is a real good self-awareness of where their emotional thermometer is. You imagine that's where you want it to be in the center. You want to be alert, you want to be focused, you want to be on point, you don't want to be relaxed and lethargic and sloth-like because you just could make bad decisions. But you don't want to be anxious, you don't want to be stressed, you don't want to be none of that. And as a trader, a great trader will say, hey, you can see that if you can. A great trader will say, hey, you know what, I'm just starting to just pick into this frustration bit and we bring myself back to center. That's that kind of light reset. I'm annoyed about it because you get annoyed. I get stopped on that low. Well, that's annoying. I just got pinged that it ripped off without me. I just didn't get my fill. Whatever. I missed the trade. Yeah. Okay. Fine. Just make sure you come back to center, because the further it goes, then the harder it is to bring back to center. And as a discretionary trader, your brain is the superpower. Your brain is what gives you the edge, and the system combined, obviously. But the further it goes, the harder it is to come back, and the further it goes, the more likely it is to stay there. And whilst it's in that full danger zone of I'm really annoyed at this market, that's when the unavoidable, not the unavoidable at all, the avoidable draw. I should have called it something better, shouldn't I? I should have called it something better. All right. The avoidable drawdown happens because you're in peak emotional state. You're causing damage to your account, and even if you're not trading on tilt and punting away, you're still looking through the lens of kind of severe emotion, which is never a good place to be. You use a different part of the brain. The blood flow goes to a different part of the brain. I think it's the amygdala. Ask a scientist, but they've proven that. And so you're trying to make risk-based decisions using a part of the brain that's not very good at making risk-based decisions. It's making decisions impulsively. It's the kind of the chimp brain, the impulsive brain. And so you need to bring yourself to reset. And again, we're trying to stop that drawdown that just doesn't need to happen. So this is where you go, okay, how do I deal with this? I need to do something pretty severe. This is where you go, I'm done for the day. Done for the day. I'm just feeling absolutely frustrated by this. Shut it all down. Cancel all orders. Shut it all down. Get out of there. The number one goal when you are in full kind of emotional state is to do no damage. The others, you can pull yourself back. You can center the needle. You can be aware of it, sort it out, deal with it. If you're in full emotional state, whatever that is for you that triggers that, we all have something. That's when your number one priority is to do no damage, because you're going to have to hold your hands up here. I've done this before in my early journey through the trading business. Just doing damage unnecessarily. You're annoyed, you're wound up, you're trading for the sake of it. You're trying to do this, you're trying to do that, and it just gets worse. It's like, no. You've got negative expectancy now. You're a danger to your account. Get out there. Journal, watching inspiring or calming trading video. I think that's a really good thing to do. Watching some like inspiring stuff to kind of shift your mindset back. Plan the next day as a fresh start. Get away from stuff. And you say, okay, I want confidence and discipline over the P&L. That's what I'm trying to do. I'm trying to improve my confidence. I'm trying to improve my discipline. Okay, so you as a trader who's taking this job seriously, who is trying to become better each day, who is trying to take it to the next level, the next station, wherever you are at the moment, you are going to be tested. And as I said at the beginning, the market is going to do it time and time and time and time again, right? The sooner we accept that, the better. Because then we say, you know what? I don't want an easy life. I can't have an easy life in trading. There's no such thing as an easy life in trading. I need the strength to endure the pressure the market puts on me. And that's the distinct difference. He's a brand new trader, beginning trader, says, I want to kind of avoid all this. So I'll look for a different strategy. I'll change my stop. I'll do this. I'll do that because I want to avoid it. But the more experienced trader like you says, hang on a second, I can't avoid it. So I need to be strong enough to withstand it and strong enough for it to not have an impact on my performance. You're going to face chop. You're going to face missed trades. You're going to get frustrated. You're going to have levels of times of overconfidence and you think, you know what, I'm a trading god. I can't do no wrong, right? These are all going to happen. The difference and the separator between the traders who are getting good results versus traders who are just getting constantly poor results well, one of the separators is how you recognize this and make the adjustments. How annoyed are you? Where are you on that emotional thermometer? And what are the adjustments you're going to do to get yourself back to center? And now listen, this starts to become second nature, right? You know, hey, that annoys me when it happens. Okay, that's fine. Well, how do I reset? Take a step back, higher time frame, take a breath, have a coffee. No big deal, easy reset. And it becomes like second nature. And then you start to be alert to where, hey, things start to get a little bit more annoying. I'm well annoyed, I'm going to shut down for the day, come back tomorrow, or come back when alerts, so whatever it might be. You start to develop that memory and that muscle so that it becomes easier, it becomes like second nature. But if you master this now, it's a skill that will serve you. And as I said, the goal here is to just reduce that avoidable drawdown. It's like you don't want to be in a situation where you are the worst enemy and you are causing the damage. And listen, it's not always about people going on tilt and going crazy here, and maybe that is you, that's fine. But it's, hey, the market's in super choppy mode at the moment. We have low volatility, ATR is getting crushed, and you're trying to grab breakouts. It's like that's the sort of stuff you don't want to do. That's avoidable. And that's probably because you want to press, because you have the higher time frame emotion of being frustrated that maybe you had a decent run and now things aren't happening so quick. How do you make them happen so quick? You go, well, I'll push the throttle down. I'll try and push for that breakout. I'll try and take this trade. So we're not necessarily talking about crazy people going on tilt here, although that isn't the mix. It can be, that lower time frame pressure and emotion, higher time frame pressure of stagnation or persistent drawdown, and then you push stuff. That's all avoidable. If you can segment that off and say, I will not take any loss that's avoidable. I'm happy with unavoidable losses. I structure my stop. The market does what the market does. I'm here for the ride. I don't care what happens. I just know that it'll work out in the wash. But if you can focus on eliminating or reducing the avoidable stuff, then that has just a massive impact to your bottom line. So master this. Think about mastering this now. And you just know that resilience, as I put here, resilience isn't optional. It has to be resilient. You have to be resilient. That's part of the edge. As a discretionary trader, resilience is a big part of your edge. And that isn't just getting up when you get knocked down and things aren't going your way. It's not allowing yourself to get into a death spiral of doing damage to the account, of doing the stuff that you know is just not serving you, whether it's trading when the market conditions aren't correct, whether it's having that impatience, all that type of stuff. So just know that's a constant test. The tests are going to be different over time. Of course they are. The numbers are going to be different. The order of magnitude is going to be different. But if you're in this for the long haul, which you probably are, if you're here watching this, because this is always a serious topic, right? It's a topic for traders who are looking for longevity in the market. Then just know that mastering this now means you don't have to master it when your size is up and it's stinging and things are way more amplified. Okay. So if I wanted to mention this is not the kind of the focus, but if we're on that full reset mode, and let's say you've had a persistent drawdown, one way to look at this from an operational perspective, we talked about mindset there, we talked about kind of some of the tactical ways, walking away, all this stuff, and the important distinction rather than anything else that we normally cover is splitting that up into, there's your light, there's your medium, there's your kind of heavy, or however you want to package it, but just understanding that the solution isn't always just to shut down and walk away, because you might never trade, and the solution isn't just to step back and look at the market, it's to kind of be aware of where you are on that emotional thermometer again. So operational tactics, if you are in a full reset and you are really annoyed, you've taken a day off, your job is to build momentum, not get back the loss. Okay, and that's the danger as well. Some people are quite good with the reset, but they come back in and they're full throttle and they're back to square one again, because you're super sensitive then to any kind of drawdown and any challenges, pinging that emotional thermometer back to that full tilt again. So small size, look for the singles and doubles, fixed risk, simple trade structure, no ads, no playing around with stuff like that. Your job, I believe, is to build momentum. Just get some numbers on the board. Get back in the saddle, get some numbers on the board if you're coming back from a full reset. Build confidence, build momentum, and build the plan of action so you can take those baby steps towards the goal, which is, okay, I want to recover, I want to get back to where I am, but I'm doing it a bit at a time. I'm not punting, I'm not going wild, I'm not oversizing, all this type of stuff. Okay, so just a couple of points here. The good way to recover and mentally recover, apart from we focus on trying to catching stuff before it gets too bad, because I believe that should be the focus. If I'm honest with you, I think that if you get too deep into it, it's very difficult. How many times have you been in trading day, you've done damage, you've stepped back and gone, I don't even know what I did there. Why did I do that? I don't. That week's disappeared and I've been trading awfully. So sometimes it's hard to catch. But the trick is to catch it upstream before. That's why I sort of kind of push on those. What are the things that trigger you the most as a real priority for you? Because if you can identify that, and it's all very personal, if you can identify that, then you can just preempt it and have a preemptive strike. So things that really work, and again, you find the one that works for you. Daily end of day review, talked about it so much, and running through trades, all this type of stuff. Won't go over that again. Even things like and this sounds cheesy, guys, I really do, but sometimes just taking a walk or just writing down and going, you know what, I am in such a fortunate position that I'm able to speculate on the markets. I've got the time, got the resources, got the intelligence, got everything that you take for granted, and many people would kill for. Maybe not that much, but you get the point, right? I'm using it metaphorically. Sometimes just saying that, saying, okay, I get to do what I love. I get to kind of grow as a trader and become and work towards this big goal that I've got, but I get to do that. And sometimes reminding yourself of that is enough to go, okay, I've been disrespecting this. I've been wanting it too quick. I've been shoving too hard. I've been, not doing the things I know I should be doing. And it sometimes just brings you back to earth a little bit. And also exercise obviously helps loads. Visualization, talked about that plenty of times. That's such a super interesting thing to get into if you can. I recommend it. And this is, and you use this as a toolkit. You say, hey, listen, where is my emotion, right? What do I need to do to get back to center? What tools do I need to deploy? That's the summary of what we're talking about. How severe is this? My goal is to not have drawdown that I can avoid. I don't want to be losing for the sake of it. Unavoidable loss, fine. Unavoidable, hey, unavoidable loss, fine. Avoidable, no. But you use then the right tools for the job. So your toolkit is some of these things, other things, there's plenty of other stuff out there. But your job is to then deploy the right tool at the right time and say, I need to take a few deep breaths, look at the higher time frame when I'm good. I need to step away, I need to shut down for a day. All with that main focus of not giving back too much profits unnecessarily, or even drawing down worse further than you wanted to unnecessarily. Okay, so final thoughts, guys. Recovery is a skill to develop. It's like any trading skill. There are a plethora of skills to develop. Your execution, your running trades, your stop loss, your system, your mindset. Recovery from whether it is persistent drawdown, whether it is frustration, whether it is an emotional thermometer intraday, recognizing that as a discretionary trader, that's your edge, your brain's your edge, your emotion and the ability to trade calmly, confidently is your edge. And so it's worth working on the skill, and just know that you are going to be tested. I got to repeat myself loads here, but it's going to happen. So there's no avoiding this. It's not something you can get round and go, well, I don't like trading trends, so I'll just stick with mean reversion, which is fine. That's you can actually do that, but this is not something you can avoid. So the sooner you get good at it, the better and the easier life is going to be. Recognizing a losing day doesn't define your month or whatever time frame you trade on. Losing a week doesn't define your year. It's very easy for us to kind of stake our identity in the outcome of an individual trade or an individual cluster of trades and get super frustrated. That's when things like gratitude and stepping back and looking at the bigger picture and going, hang on a second, do you know what? I effed up today. I did. I effed up. I didn't do the right stuff. But you know what? It didn't get worse. I didn't trade it well. I've learned from it. It doesn't define me as a trader. I'm going to put it into perspective. I'm going to come back tomorrow with fresh confidence, fresh eyes, and I'm not going to let it taint me. And that's the difference between a trader who goes, oh, you know what, I was down 2,000 pounds today, or 200 pounds, whatever level it is. I'm going to get that back. Really important to get that back. It's just putting things in perspective. I know it's not easy sometimes, but that's such a superpower for a discretionary trader. And as I say here, the best traders are not perfect by any stretch of imagination. The greatest traders alive are not perfect. In fact, I send an email out every day. If many of you are on this list already, tradersmastermind.com. If you're not, a free daily email, my thoughts, some ideas, AI, all sorts of stuff, anything that's just useful and cool for traders. And one of the things that I posted was a link to the Trader documentary. It's on YouTube, gets taken on and off. It's Paul Tudor Jones, the greatest trader of our time, one of the greatest traders of our time. And watching this, and if forgive me if I'm repeating myself, guys, if you've read this already, and I talked about our podcast as well, because it just sums up everything, right? Greatest trader of our time. He is there getting emotional, frustrated, but he's managing it. And the key is he's not letting, took a $5 million hit on one day, right? And it was one of the worst days he had. But a couple of weeks later, he was back up above highs again because he was recovering from drawdown. And that was, unavoidable. He stuck to his strategy, stuck to his system. He could have so easily then traded on tilt. And he so easily got it because he was annoyed. Because he's a human being, right? You're okay to be annoyed. He's like, I'm not going to let that cloud my judgment. I'm going to trade what I know. Dunk, 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 dunk. And it worked out all right for him. So the best traders aren't perfect. They're resilient. So next time you feel frustrated, next time you feel like that emotional thermometer is swinging a bit, go, okay, this is normal. The best in the world, the very, very top of the tree still have this. But what they're good at is being able to bring it back to this. And if you can get better at that, whatever level you're at now, that will stand you in such good stead. And it comes back to that initial point of, okay, how do we recover quickly? And going one step further is not getting into the point where we are in that depth of despair, of drawdown, and having to recover, which ultimately is all about emotional regulation as well, or not necessarily regulation, but not letting it cloud your judgment. And the faster you reset, the smaller the damage. That's the kind of the key for it. All right. We're a good time today. We're a good time. Q&A, if you'd like to stay for Q&A, you're very welcome. Ask me questions. I help you out if I can. Next week, we have Mastering the Inner Game. So we're going to go real deep, focus, discipline, and this is the one I really like, decision-making under pressure. Okay, so join me for that. Register for that. Worth saying because I know many of you like to go. But if you'd like to stay for the Q&A, you are very welcome. If you have a question, please do ask me. I'll do my very best to help you. I don't know everything. I know a lot. I know a decent amount. This is my life's kind of work. If you like, I started trading when I was 21. Done nothing else. So if I can help, I will. But I'm also fully aware that I don't know everything, guys. I don't know everything, but I know a lot of people who could help you out if I don't know the answer. It's a long-winded way of saying, ask me questions. If I can help you, I will. Okay. This is a great question, Sandeep. How can we object? You know what? Let me just take a quick swig of water. Sandeep, how can we objectively tell the difference between a normal drawdown and one caused by our own errors or mindset lapses? Great question, Sandeep. I'm glad you're the winner because I was waiting for someone to ask this and you were first, the first off the mark with that. This is a very interesting discussion, and people have asked me this before, and I've often pondered this as well with my own trading. I think you deep down, like if you've not stuck to your rules, if you traded from emotion, if you added to a trade when you shouldn't have, added to a loser, deep down, right? And so you can look at your equity curve and you can say, and however you journal, you can say, you know what, I wasn't really doing the right thing there. That drawdown was caused because I jumped the gun. And this comes down to kind of good record keeping, good journaling and stuff. And just being completely honest. And listen, one of the key things of trading is to be completely honest. You've got to look yourself in the mirror and, like it or not, tell the truth and say, you know what, I'm just trading badly and I'm sticking to my plan. I'm doing everything I can, but I'm trading badly. Okay, well, it's a strategy issue. Now, do I ride this out and believe that we're going to come good, or am I trading the wrong strategy for the wrong market conditions? Separate diagnosis, separate prescription versus, I'm just shooting from the hip here. I'm trading stuff that I shouldn't be trading. I'm making the errors. And so I guess the short answer is ask yourself the question, Sit down, no distractions, phone off, get your results and go, hey, is this because I'm not sticking to the rules, or is it because my strategy just isn't effective? That's a separate protocol, if you like, for recovery, but I think that's important. Another question from Sandy. What are some early warning signs, especially subtle ones, that we're on the verge of making a drawdown worse? Personal, but maybe for many traders, it's frustration, right? And that can come from you've made a bit, lost a bit. Often traders have a good run, then they lose a bit, make a bit, lose a bit, make a bit, lose a bit. The frustration of that stagnation gets to them, and that can then cause a little bit more urgency, a little bit more size, that type of stuff, which can cause the spiral. Personal for you, Sandeep, personal to anybody, but recognizing that precursor, and the better you can get at that, the more you can preempt it. If I've had a good run and then I'm just sitting there stagnating a bit, I have to go, this is normal, man. Just chill, because we want more of what was good. We want more of that really superstar month, or superstar quarter. Of course we do, but trading doesn't do that. Trading doesn't give the results in a linear fashion, regardless of how effective your system is. You're going to have the stagnation. You're going to have drawdown. You're going to have, and so recognizing what it is for you, and say, hey, what am I earning warning signs? Maybe too eager to trade. Maybe start to watch the P&L. Maybe you go down the time frames. Just the stuff that but a little bit more anxious about. Watching NFP, the results, a bit sweaty palms at the open, whatever it might be. That's the sort of things that's very personal to you. But again, with the honesty, looking yourself in the mirror and saying, this is not the centered trader I know I can be. Okay. David says, when you say step back, look at the higher time frame, is it daily or 15 in terms of a 1 minute entry? David, for you, I would say if you're trading a 1 minute, just go back to the daily. Just go, because it's a reset. Don't forget it's a reset button. And a reset button, if you're on the lower time frames, the 1, the 3, the 5, I'll call those the lower. At one point you need to go, let me just calm stuff. Where are we? Where the hell are we? Just get your chart up. Daily, I think, is the right North Star there, and say, hang on a second, we're in the middle of no man's land. Or listen, the market's in a bull market. Sometimes it's that epiphany. It's not really epiphany, but that's that smack in the face of, man, I'm forcing shorts too much. Why am I forcing momentum shorts when we're sitting at highs, for example? Okay, let me wait for the market to rotate and press the long. Sometimes it's just that, and that's caused you to kind of have those drawdowns, those losing trades, cause the frustration. And so stepping back, looking at the bigger picture, and letting the trader in you, the logical trader in you, say, hey, what am I trading? Where are we? Okay, with gap lower, you kind of run through the narrative that's important to you, and that just helps you reset, because all you're looking to do, David, there is reset. Tandeep says, okay, one more question, Sandeep. What are some practical non-generic reset tactics you've seen work consistently, even during prolonged or emotional slumps? Sandeep, these are good questions. Are you, Sandeep, running me through AI and AI's come up with these questions? Because these seem very good and on point, or are you just really, really sharp and on point? But these have a little flavor of what's the question I can ask? But it's a great question, so I appreciate it nonetheless. Practical non-generic reset tactics you've seen work consistently. Non-generic. So I think, yeah, I mean, listen, anything to get you away from the current situation. So even though it might seem generic, that's why going away and getting it for a walk, or sticking on your noise cancelling headphones and putting on some binaural beats or some focus music, even sticking on your noise headphone. I don't know why I'm putting a headphone of any brand, noise cancelling or not, and just changing your state. So maybe you like some sort of heavy metal, maybe you like some sort of favorite pop tune or whatever it is. Anything to change your state and remind yourself of where you are and how you're doing. So in the morning, if you've got this prolonged slump, just get yourself in the right mood. Use music as a tool to get you in the right mood. Do things like that. Do things extracurricular, like lift a little bit more at the gym, or anything that kind of takes your focus on your credibility as a man, woman, on your trading results, because that's the thing that causes the perception that you're not doing well. You're like, how can I call myself a trader? I'm prolonged drawdown, things are hurting, blah, blah, blah. Okay, listen, put other things in your life that are important. And so I think that works very, very well. and you could say that's possibly non-generic, just to have something that's even a hobby, right? If you like tinkering with cars or bikes or something, with your hands, you like doing woodwork, gardening, that can help as well. That's non-generic, and I find that sort of thing helps use a different part of the brain, and it helps you think, okay, listen, let's put things in perspective here. I'm not put on this earth to sit in front of the screen trading the market ticks all day long. Yes, that's something that's important to me. Yes, that's something that's you know I feel like you could feel like it's your calling, and I want to get good at it. But that's not the sole purpose, right? And so I think just having that as well helps a lot. Gary says, thanks very much, Mark. Hey, Gary, thank you, pal. Robin says, hi, Mark. Thank you so much for these webinars. You're very welcome, mate. You're very welcome. I'm glad you're enjoying these. If your stats are fine, being a multi-week flat stretch, how do you decide whether to reset or keep executing? Another great question, Robin. An honest reflection of what you're trading and the market conditions. And again, I know this is not a perfect answer, and you have to accept my apologies. I don't think there is one for this. Sometimes there is. This isn't one. But it's saying, okay, are you trading a mean reversion strategy and the market suddenly ripped into a trending mode? Are you trying to trade breakouts and the market's gone into a kind of consolidation mode? If so, then you might say, maybe I need to adjust. Maybe I need to adjust and adapt, which is why I'm a big fan of having kind of different playbooks. As you caveat that as you get more experienced and you kind of, I think the name of the game is have one and go on and off. Say, hey, we're not in a trending environment. I'm not trading this volatility expansion playbook, or a mean reversion. Now we're in trending environment. I'm on and off the throttle. Then as you get more experience, I think it's good to have different playbooks for different environments. And the last thing you want to do is pull the plug on something when it suddenly kicks into gear, but only you can make that decision. It's why it always makes me laugh when we've got full algo traders who say, "Oh, it's great because I trade without emotion and blah blah." Well, maybe you do on the execution, but you still look at the equity curve and you still have to make a decision, like you or I, that says, "I'm pulling the plug on this. I don't like it," versus sticking to it. And there's no real right or wrong answer or perfect answer for that. It's just, I think we're in the right conditions for them. It should, for all intents and purposes, this should be working, this system. Is anything glaringly obvious? Is there any low-hanging fruit here that I'm missing? No. Okay, keep going. Versus, hang on a second, I'm adding to breakout or whatever it is. That probably needs to be adjusted and adapted. Okay. Abraham says, how do you manage market manipulations? Abraham, how do you manage market manipulations? I don't believe, generally speaking, that the market is manipulated as such. Yes, there's people who get insider info, and yes, it does feel at times like the market is out to trap, but the market trades to liquidity. This is a big topic. Market trades to liquidity, and very often, it trades through lows, it trades through highs. It feels like it's manipulated. If you believe the market is manipulated, play chess and say, I think this is manipulated. I'm going to take that into account, use gaming theory, and say, how would the market be manipulated to make the most profit for the manipulator? Where would that market have to go? How do I ride the coattails? That's the way I would look at it if I thought the market was manipulated. Yeah, of course, there are times when people get numbers before they should, and sometimes news is baked in, especially when talking about geopolitical stuff and tariff stuff. I'm not naive enough to think that, but also not super cynical to think that there's some magic guy out there who's manipulating things back and forth. That's my take on it. Right or wrong, someone could come up tomorrow and say there's a big cartel who's been manipulating things and it's happening every day, and I'd hold my hands up and I'd go, you know what, Abraham, I was wrong there. But I think that it's better to be more accepting the market is random and everyone's objective is slightly different, and then there's edge in the short term, the supply demand inefficiencies, and to focus on those. Okay, I missed last week's session. Tim, I missed last week's session. Does it get sent out? Is it in my email or available somewhere, please? Yeah, it gets sent out, Tim. If you don't get a copy, I say this to everybody, if you reply to my daily email, Armand is the great guy around manages my inbox for me. He will send you a copy. So it should be sent out to you. Pepperstone should send this out to you. If for any reason that you don't find it, get disappeared, lost in the post, send a reply to any of my daily emails saying, may I have a copy of this? And as soon as we have a copy, Armand will send it out. Or he keeps track of people who have asked it, and he'll send it out for me. He's a good guy like that. We want you to get the recording. Um, okay, let's ask a few more questions. Answer a few more questions. We've got time. We've got time. We're good for time. How's the market's doing, guys? How's the market's doing? Little dip below that low. Oh, I'm looking at the Russell. What's the Q's doing? Oh, big dip below the low on the Q's. Okay. Ezedine says, great one. Thanks, Mark. Thank you, Ezedine. You're on fire at the moment, pal. Keep it going. Keep the pressure on. Lee says, hi, Mark. Thank you for this session. You're welcome, Lee. In full reset operation tactics for recovery, what does singles and doubles mean? Good question. Sorry for not clarifying. Singles and doubles means, again, this is personal, just how you see fit and how your style, but just getting some A to B trades. So you buy at resistance. Let's say you bought at resistance back to VWAP if you're a day trader. So you're buying a breakout, looking for 1R, 2R. You're not looking for home runs. You're not trying to push and press, because if you push and press, the nature of pushing and pressing for those sixes and the fours and the big moves is that you tend to risk the unrealized P&L, right? So you're up 2R, you add to the trade, or you hold for kind of 10R. You're risking that unrealized P&L. That may be how you normally trade, but I'm a big believer that you kind of want to get momentum. And so if you're in recovery mode, your objective is to just get some numbers on the board. And now the spreadsheet trader goes, oh, no, you shouldn't be doing that. You should be efficient and effective and trying to get the most out of the market. And logically, yeah, whatever, pal. Like, we're human beings, and sometimes we just need a bit of confidence, a bit of momentum. And it can take a day or two. We just go ding, ding, just grabbing a few pips. If you're a forex trader, a few points here, a few bucks, just put something in the bank, get momentum back up. You still feel good about reading the market. And sometimes you just need that. So singles and doubles is just not swinging for the fences, not trying to have the Hail Mary stuff, just doing the little kind of edge that plays out over time. That's a good question. Okay, when I scroll back to the questions, it always goes back to the top and bottom. Okay, thank you, Lee. Robin says, do you ever see traders spiral not from losses but from under trading or waiting too much? Rarely, but yes, I see traders sitting and doing nothing under the guise of I'm being patient. I'm really just scared. They're scared of taking a risk. You've got to take risk. We're in the business of risk. We can't take a trade that has no zero risk. And so a lot of traders, well, not a lot of traders, it's a small minority. Most of us are kind of on the aggressive side, right? You're kind of pushing. But a lot of traders sit there, do nothing, say, I'm being a good trader, I'm being a good little boy, I'm not trading. No. You're fearful, you're scared, in which case the result is, and that's not a shaming person does that, it's just being realistic. The answer to that is to dial down the size into a point where you're not scared of taking the risk and just putting some money in the markets, getting some risk capital on point, just doing that. Because otherwise you can just be paralyzed and give yourself a pat on the back saying, oh, I'm doing the good job. But actually, I'm actually not pulling the trigger when I should do. Alana Fellaballa, recognize you from last time, Alana, that name. I get drawdown when it doesn't react to levels cleanly. Maybe I have a zone in my 15 or 60 minute. It comes there on my 1 minute, but it chops around at level for a while before it goes. We've all got the triggers. And the good thing about that, Alana, is that you recognized it and you said, hands up, this thing really annoys me. And if it happens, it does it. You go, wait, where's my emotional thermometer? It's okay. What's the next trade I'm looking for? Etc. etc. So good. I think I better thank you. Hang on. Sandeep says thanks for those tips. Appreciate that, Sandeep. Sandeep says thanks you was thinking about using headphones. I think headphones are great. Music is such a great catalyst. If you like music, who doesn't like music? You can use it to invoke emotion, get you in a state that you need to get in a state of. And I think it's very, very useful tool. A very, very useful tool. Another one is when it comes to my another one is when it comes to my level, I keep seeing a pattern morph of double bottom and my 15-minute support, but I take the trigger and the pattern morphs. This is where my biggest drawdown comes in because I keep trying to buy every 15-minute level while the daily's on a pullback. Recognizing it and dealing with it is important. Okay, Mark, good name, says, curious to know if walking away is truly better than immediately dealing with the situation and facing what's just happened, rather than going away and coming back to a different mindset. A bit like having detention at school a week after misdemeanor. Just wondering if there's less impact after a timeout. That's a really good question, Mark. The way I frame it is this: is I want the emotion to dissipate. And so whatever I need to do, I don't want to make a decision that's clouded and tainted with emotion. And so the walking away is often a way to let the emotion dissipate. You have a walk through the woods, you have a walk through wherever you walk down the street, whatever it might be. The emotion dissipates, you come back to center, you can make a sound trading decision next. Now, if you don't have that emotion clouding your judgment and polluting the decision, then fine, deal with the situation. But for many traders, that just digs a bigger hole. And so walking away and saying, listen, let this sequence play out, let me come back and let me see what happens in the afternoon and whatever, I think is generally the better way to approach this. But that's a really good question. Okay, so how do you avoid letting reset turn into disengagement or fear of re-entry? Robin, good question again. You have a plan of action. You say, I'm going to get back into this is my setup, this is my approach, this is my plan, and dialing down size if you need to, so that you can get back on the horse when the trade comes up. And it's having a word with yourself. And based on some of those questions, if you erring on the side of caution, fear, that's okay. You're acknowledging it, but then say, okay, what do I need to do? What protocols do I need to do to make sure that I'm trading when I say I'm going to trade? I'm pulling the trigger. Do I need to start small size? Do I need to kind of get some numbers on the board? That type of thing. Sandeep says, thanks for the tips. Appreciate that. Rob Ribeiro says, great as usual. Thanks. Appreciate that, Rob. I can see the market in the corner of my eye, just taking a big old tank here. Have I missed something here? What's one reset tactic that surprised you with how well it works? Something simple but reliable. Do you know what? Before I started visualization, I poo-pooed it, woo-woo stuff. Man, it's not me, man. Rah, trader. I'm just gonna smash it. I'm gonna recover with money. But visualization, I think, is a super useful reset tactic. You just remind yourself what you're doing, your protocol, how you're approaching trading, put yourself in the position of power. Hey, I'm in control here, that type of thing. Thank you, Beth, for your kind words. Charlotte says, where can I sign up for your daily email again? Charlotte, if you go to tradersmastermind.com, that I haven't got the URL, but there, tradersmastermind.com, that's what we do. That's the homepage there. You're very welcome to sign up for that. Nuno says, thank you, Mark. Appreciate it. Sandeep says, always enjoy your webinars. Thank you, Sandeep. Glad you're getting some value from them. I've got 3 or 4 questions. Anthony says, I'd like to know more about your risk mitigation strategies after a series of losses. Do you know, Anthony, it's pretty much as I said, isn't it, that I'm just mindful of, okay, do I need to take drastic action here or not? Now, I'm a bit more experienced than some traders, so I'm cautious not to go full clip and go, well, drastic action. That's rare. Like, I can't even think the last time I take real drastic action on stuff. Most of the time it's a walk away or it's a step back for a day or 2 a week. And recognizing that it's not, oh, I need to rewrite everything and everything's gone to pot. So I'm cautious that if you dial down size too much, you end up, as you come back in, you never really recover. But at the same time, confidence building and boosting and building the foundations is important for a developing trader. So sometimes coming back in with a small size, a small clip, get yourself back on the horse, steady the ship, as I like to say. Hey, you're rocky, you're dangerous, you're at risk of blowing up. Size it down, take some time off, steady the ship. When you're feeling back on point, get the size back up to the level that you're at and you're used to before. Lani says, can you share your email as I need so may pass PowerPoints? If you reply to the daily email, the reason I say this is because this will definitely get to me. You can use the support at Traders Mastermind if you want, but sometimes it just goes in junk, we can miss it. Reply to the daily email, we'll get that to you. How do you deal with watchlist creep? Watchlist gets larger as I wait for trades, then I start trading stuff like Euro Swiss. So true, Alana. Discipline. Saying, you know what, do I need to be watching all this crap? I probably don't. And why am I watching all this crap? Because I'm looking for trades. And where does that lead? That leads to me taking substandard dog rubbish trades that I don't need to be trading. Discipline, take it back off, do a prune. And you know what? Sometimes it's prudent to do like a monthly prune and go, why have I got this crap on the board? why am I watching so and so futures? Why do I even care about the price of Peloton stock if you're not, I'm wasting my time here. I'm using valuable resources on nonsense I don't need. And it just comes with discipline. But again, recognizing that that is a creep for you and saying, hey, at what point do I need to stop adding stuff in because I'm now hunting for trades as opposed to let trades come out and slapping me in the face, as Peter does say. Mark R says, brilliant session, Mark, as always. Thank you, pal. Appreciate that. Thank you for sharing your time, insights, and experience. I do appreciate that, pal. Thank you. Charlotte says, thank you. Michael says, really appreciate your work, Mark. Do you recommend a source to get into visualization, books, videos, etc.? As cheesy as it is, Tony Robbins does a lot of stuff on that. And there's also a podcast episode for a man called Ed Milet. I'm not sure what he calls the podcast, his podcast. Max Out, right? He is an entrepreneur, business owner, etc. And he has an episode somewhere a long time ago where he talks about visualization in depth. And that episode I listened to many years ago really resonated with me. But it's just practice, because there's no real science to it, but it's some good tools in that. So Ed Milet, ED, MYLETT, and I think it's Max Out, he calls it, a podcast. He's into peak performance, he's an entrepreneur, that type of stuff. And on one of his episodes, he goes really deep into visualization, and it's some great stuff. So you have a dig around for that. And finally, Robert says, thank you for your wise advice last week. This has literally paid dividends this week. Good to hear it, Robert. Helping you make more, lose less, move the needle forward, get to the next level, next station, take things up a notch. That's what we're about. I'm pleased to hear it. Thanks for the feedback, pal, and appreciate you sharing that with me. Okay, Michael says cheers. Thanks so much, ladies and gents. We'll call it an evening there. Let's see what the market has in store for us. Keep the risk managed. Don't forget, you've got a break on Thursday. We've got Fed tomorrow. All sorts of stuff going on. Don't rush. Be patient and take away one or two bits that you might want to implement into your trading from the webinar. We're back again next week. Thank you so much, ladies and gents. Take care. Bye-bye.